how this Russian invasion will impact portfolios. Quad 4's Philippe Jagal spoke with a financial advisor who recommends people take a level-headed approach to all of this.
A lot of folks are nervous.
Nervous about how the crisis in Ukraine will impact their portfolios. A natural reaction to wild market swings, but in the long term, the concern may be unwarranted.
Ukraine as a country is not in a lot of indexes. So although it's an unfortunate situation from a stock market performance standpoint, especially for U.S. investors that tend to have a lot of U.S.-based equities in their portfolio, it's not something that's going to lead to a large correction over the long term.
William Houston Jr. is the CEO and founder of Bay Street Capital Holdings along the peninsula, an investment firm focusing on building portfolios that reduce volatility.
When you hear a statement like interest rates are going to increase, there's certain industries that will perform well in that environment. You know, banks perform well when interest rates increase, utilities perform well, insurance companies perform well. So there's nothing wrong with, you know, keeping that in mind with your portfolio if you want to take additional exposure to those sorts of sectors.
But the bottom line, Williams says, is to diversify, especially during times of war.
At a time like right now, a lot of folks are looking at their accounts saying, oh, I don't want to lose the gains that I made over the last couple of months. But the right attitude would be, you know, let's make sure that we're buying right now as opposed to panicking and reacting to some news that we see. That would be the wrong approach.
He adds, unless you are an expert, be cautious with cryptocurrencies. Allocating 5% of your portfolio to crypto is okay, but any more could pose an unnecessary risk. Philippe Jagal, KRON 4 News.